Hi, everyone. This is Jason Barrick of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. We're recording this interview on Wednesday, April 30th, 2025. The US dollar gold price is correcting a little bit. It's below $3,300 today when we're recording this interview. My special guest is a returning guest. He used to work at Casey Research as the chief editor, wrote outstanding articles for them for many, many years. He's now gone off on his own, and he writes independent speculator and he writes the Independent Speculator newsletter. He has a free database of mining stocks with junior miners and also a paid database, extensive research, multiple newsletters. Lobo Tigre, thank you for joining me again.
Glad to be back on the show, Jason.
Now, Lobo, I want to get your thoughts on the gold mining sector right now. Because it seems a lot of these other industries, they're reporting, bad numbers. They're blaming it on the tariffs. It's looking like we're having like GDP problems. They're claiming inflation's down, but I think like in the real world, inflation's up. Would you say that the gold mining industry, actually, there's going to be some good free cash flow coming up in the next couple quarters?
Yes, I'd say it's coming up now. And, several things. One, about a year ago, I wrote an article called "Are Gold Stocks Broken?" Because the understandable angst in our space was, gold's hitting nominal, at least all-time highs, and the gold stocks aren't going anywhere. And this had been going on for long enough that even longtime gold bugs are starting to pull their hair out and capitulate. Like, if at the time, if $2,600 gold isn't going to get these gold stocks going, what will, right? So I wrote that article and I pointed out, and it's not all my original thinking, give credit where due. Rick Rule, I'm sure you've spoken to him about this, pointed out how the last time we had a big run up in gold, the big gold producers managed to turn that into increasingly negative free cash flow. Like they totally flubbed the bull market. And so doesn't have to be a conspiracy. It's totally understandable if that's the recency bias, it's totally understandable for real investors who look at the actual fundamentals of the companies and say, well, just because gold up, that doesn't mean these crappy miners will necessarily do a better job. So my thesis was that we have seen discipline since then. We have seen companies not just buying ounces wherever and of whatever sort to put them on the books. And we've seen discipline on not just the M&A, but on the exploration front, all kinds of positive signs. So my thesis was that the companies would improve their free cash flow. That would become evident, and that would start to move the stocks. That would start to make these as a class investable, where it was reasonable to ask before, if not. And this is actually what's played out over the last year. And if you recall, there was a big... it was such a big deal that even mainstream financial media that only ever wants to talk about Nvidia and Bitcoin or whatever, we're talking about if you remember a couple quarters ago, we had that big flap with Newmont, which missed analyst estimates and got pounded, like dropped 15% in a day or something for that, even though they actually like tripled the revenue to the bottom line. It just wasn't as much as what was expected. So where I'm going with this is that, this is starting to get mainstream attention and the companies are starting to deliver. And I generally don't focus on one company, but since I mentioned Newmont, I'll go ahead and mention, it has just done much better. And, this time exceeded expectations. And Newmont isn't even the best of them. So we're starting to see, gold stocks get that mojo that everybody, a year and a half ago was worried was dead. The gold stocks were dead. Well, they're not. And it's not just the majors. We're starting to see it, at least in the better mid-tiers and juniors. The stocks are not just moving with gold, but moving with leverage to gold. And, the one takeaway from this one corollary to this is uncomfortable, but I'm trying to be helpful. So I'll go ahead and say it is, if you've got gold stocks that aren't moving at all, they're just flatlined with gold having hit at least nominally 3,500. The market is passing judgment on that stock. Either you're a genius and you're right and you picked something that nobody else understands, or maybe that stock's not as good as you think it is. So, it's a really interesting time, and we're there now, Jason. The companies are delivering. I don't want to start naming too many names, but the better operators in this space are producing record results, and the the market is taking notice. This is extremely bullish for those long-suffering gold bugs who've been waiting for exactly this.
And I think to add to your points there, there's a real sweet spot here for at least a couple quarters. We had it from Q1 earnings and one or two quarters last year in 2024, but at least for the next couple quarters for profit margins where a relatively high gold price, energy prices are at the bottom end of a trading range. So I don't see a huge input cost increase from some of the miners.
Yeah, we dropped below 60 today.
Yeah, so for diesel and electricity, I mean, this is an opportunity for some of these gold miners to actually beat on, like Lobo saying, a beat on their earnings, on their profit margins, free cash flow numbers. Now, the question is, for me, what are they going to do with that free cash flow? And I think that's
Yes.
that's what's going to benefit us in our
they
portfolio.
might flub it again, Jason. Give them time. It just seems like it. You give these guys ropes and they find a way to make a noose out of it no matter what. But that will take time. And in the meantime, this is the kind of thing, like this is even Warren Buffett-y, right? These are businesses that have increasing margins and a tremendous moat. I mean, it's hard to find a better moat in the world than what mining has because, you can't guarantee a discovery, even if you make one, getting the permits, even with Trump's, mining warp speed, that's a question mark. It still takes time and you got to finance the mine. You got to build the mine. So even if Trump just says, okay, we're giving everybody permits tomorrow, and that makes the US the mecca of mine building, well, you still got to finance it and build it. Even that means 2 years, right? For the faster ones before these mines come online. So, in Buffett-y terms, that is an awesome moat that you have where there just not only isn't, but can't be competition anytime soon while you've got this margin expansion. And one more point on that, it's not just lower fuel costs and things like that. This is actually, one of these, good side, bad side, good news, bad news kind of jokes with the doctor. The good news is that gold's going up and all that. The bad news is the rest of the commodity complex will catch up with that. At some point, the very things that are driving gold up will drive your costs up as well. So the trick, as it were, it's not really a trick, but the opportunity for courageous contrarians is to get in there before the costs catch up, to understand, the price of the commodity has moved before the mining costs catch up, and they always do eventually. So the opportunity isn't forever, but it's here now, and there's an incredible moat. Who knows? Maybe whoever it was on Buffett's team that bought Barrick a couple years ago, maybe they'll buy back in again. Maybe not that one, but maybe somebody else.
Do you think that we're going to see like generalist investors go from like 0% gold exposure assets under management? And these are large pools of capital, so tens of billions or $100 billion or more. They're going to go from 0% gold exposure up to 1% or 2% with buying gold stocks, maybe buying some private placements, besides just, the normal stuff with like GLD or Barrick Gold or Newmont.
Well, you say normal stuff like GLD, it just wasn't there before. So this is an interesting question. If somebody is looking at the world and looking at Putin, not playing ball with Trump and, Xi eyeing Taiwan and, who the hell knows what's going to happen with Iran and they can't have a nuclear weapon. Never mind the consequences of the tariff war and China not backing down on that front. There's so many reasons right now for somebody to say, you know what, a little bit of safe haven hedging in my portfolio wouldn't be a bad thing. But it doesn't follow. Like if that's the reasoning, Jason, if we're looking at Rick Rule's scenario of, the multi-decade mean is a 2% allocation to gold as a safe haven, and it's only 0.5% now. Therefore, if we revert to mean, there's this huge increase in investment demand for gold. Fine. I do actually think we see evidence of that. We've seen in the last few reports a huge increase, not just in ETFs and gold in China, but in the West, in North America specifically. We're seeing the GLD inflows and others. So I think this is telling. I think this is evidence of this shift that Rick has predicted for so long. But to the point of your question, though, is if you're doing this because you're nervous, that doesn't necessarily make you want to buy gold stocks. That's adding a risk on. So when you need to go from saying, gee, I'm nervous about the world, or I'm nervous about the markets, I'm going to hedge with a little bit of gold. You need to take the extra step from there of, gee, Gold is going nuts. Gold is the cat's meow. Everybody loves gold. I want leverage. So it's a completely different thinking. It goes from fear to greed. And I'm
Well,
not sure that we're there yet. But we'll
the
see.
other and it's shown me with the results, like you said, with the Q1 earnings, that they can't, miss the numbers badly. They can't do bad acquisitions. The industry did $70 billion, I think, of bad deals from 2009 to about 2017. There was absolutely insane amounts of write-offs with bad deals. The industry cannot repeat that. Now, people are like, what guarantees that this won't happen again? I mean, didn't a lot of gold mining CEOs, they lost their job during that time period? They were blamed for all the bad deals.
Yes, heads rolled, and I think that's part of why we're seeing better results this time. There's no guarantees that things can always go wrong, and you never know. But right now, the recency bias that has kept generalist investors out of gold stocks is the same recency bias that's keeping mining CEOs a little bit more self-aware and conscious of their need to actually deliver it as a business, right? You can't just book ounces in the middle of AK-47 Central and say, what a good boy am I.
The other thing here is sector specific, because a lot of these other industries are not hitting their numbers. Their free cash flow is down. They're blaming bad earnings for Q1, bad revenues, or the lack of free cash flow. Things are on a downtrend. They're blaming it on the tariffs. They're blaming it on recession. They're blaming it on inflation in a different country and higher input costs. And you're not seeing that with the gold miners. So the gold miners, on a relative basis compared to the other S&P 500 sectors, there's actually the potential for what upside surprises and free cash flow growth, unlike a lot of these other industries.
Yeah, that's if you want to do a bit of arm waving and get your fancy headline, get people all excited. That's an excellent basis to make that pitch on. There's a scenario in which, even without a market, crash, not a huge meltdown, not a 2008 style scenario, or nothing like that dramatic, because the money helicopters are still in the air as we speak. Suppose it's just sort of this grind lower, this disappointment, and things not there's so much easy money out there that it's not crashing, but there's so much pain from the adjustments. Like, even if you're 100% support Trump's agenda, there will be pain making those adjustments. Besant is saying 2 or 3 quarters, whereas candidate Trump was saying day one. So, you know, what I'm saying, right? So let's say there's just struggle ahead, stagflation, all that stuff. So it's not like, the end of the world, but nothing is delivering as hoped. And at that point, people are looking around, well, where's the bright light in the night? And suddenly look at the gold stocks. They're just delivering in spades. There's a scenario in this, and I'm not predicting and saying this is what will happen, but I'm saying this is one possible outcome, like this year, that people will be looking around for the light in the night, and it'll be gold stocks. And that would really bring in that retail participation that's been completely absent since that the end of the 1970s.
Now, the mining business, a lot of my listeners, there's a lot of people that are just starting to research gold stocks right now. I'm getting a lot of questions about this. What options does a mining company, so like a Newmont Mining, Barrick Gold, Agnico Eagle, that is announcing free cash flow at these high gold prices, relatively low energy, where can they allocate their free cash flow? What options does management have?
Oh, well, they've got lots of options, but a lot of them are stupid. I'm mining is so inherently difficult. I mean, the underlying commodities are so volatile that if memory serves, Messrs. Graham and Dodd said that even the biggest and the best, the entire mining industry is not amenable to securities analysis of the type they advocate, because it's just too volatile. So there's so much craziness out there, and I'm not the CEO of one of these big companies, so just a peasant scum of the earth newsletter writer. So what do I know? But I'll tell you, things that make me run the other way are share buybacks, and I get it. If you think your company's undervalued, the industry average is three times NAV, and you're only trading at 2x, and the market just doesn't see how wonderful your company is. Well, I'm going to buy shares back and drive it up. Well, in a business where nationalization can change your whole profit outlook overnight, or the legendary endangered mosquito can put your balance sheet at risk overnight and these things. I just think that's a bad use of funds. If they can't think of anything better to do than to buy shares back, then they probably shouldn't be CEO. I'd rather see them buy another project, extend a mine life, pay for upgrades, or even in parts of the world where you need green credentials, invest in going electric or something like that. Yeah, even if I don't think that's strictly speaking necessary, if it enables your mine to go forward in a jurisdiction where it otherwise wouldn't, there are so many uses of capital that are better than that. Now, personally, I'm not in it for dividends, but I understand that a lot of people, particularly later on in life on a fixed income and so on, they are looking for dividends. So that's not an unreasonable thing for the larger companies to do. And for smaller ones, it ticks a box. They're institutional investors that won't buy or won't write them up, sell side without the dividends. So I kind of understand, but it's not as bad as share buybacks, but I don't want to see all the cash flowing out to dividends. I want to see it going into growing the business. And from there, you can guess where all of my answers to all of these various possibilities would be. Personally, I think that since money is so hard to come by in the mining space, that when you've got it flowing, when you see that FCF going up, and it's not going to last forever, the costs are going to catch up with the metal eventually. So you make hay while the sun is shining, you stock it up, if not for the rainy day, then to, buy quality assets or, may the wonders never cease, give your poor exploration team, a budget again to get out there and make the big discovery. It's kind of embarrassing how many of these big companies, all their growth comes from buying juniors that did the hard work of making these discoveries.
It's really tough for Newmont Mining and Barrick Gold to keep growing. I mean, they're already pulling approximately 5 million ounces of gold per year out of the ground. They have to replace those reserves. There's depletion to maintain the grades. Normally the cost is up. I think like Newmont Mining and Barrick Gold, their costs are up roughly about 50% in the last 5 years to maintain the same amount of grade and the same amount of production, the average ore grade. So it's just very tough. I mean, for Newmont to get to 6 million ounces or something like that, it's going to be very, very difficult.
Yeah, think about it. If at that level, they need to buy or discover one world-class gold deposit every year. And how often do we hear of that discovery? So it's interesting. The M&A is going to continue regardless. They have no choice. But somebody better get out there and start exploring, or there's going to be a real crunch there.
Well, I think it's easier for the mid-tier. I think my point was it's easier for even Agnico Eagle, which is producing a little over 1 million ounces of gold per year, and some of these mid-tier gold miners to merge and then grow that way rather than Barrick Gold and Newmont Mining. Because for them to grow, they have to do sheer dilution. Their management team is going to misallocate capital, and at least in the past they would do that. So to grow from 5 million ounces a year of gold to 5.5 or 6, I mean that's a lot of capital to do it, and they're probably not going to do it efficiently.
Yeah, well, I guess potato, but I mean, they have to do something. I mean, and there's only so many assets. We've kind of been watching a gold mining version of the Highlander movie here, where in the end there can only be one. I mean, at this point, if I'm not recommending this, let's say if Barrick and Agnico get together and take on Newmont, what is left other than for them to merge, and then that's it. There's nothing else to do. If the only thing big enough for Newmont to grow by a merger is taking out the number 2 and 3 contenders, well, let's say they do that, fine. Then how do they grow? I mean, there isn't anything else, right? So, and they've got money. Somebody who shall remain nameless just sold what appears to be a world-class asset in a pro-mining jurisdiction for $1 billion. And, what are they going to do with that money? If they fricking give it back to shareholders via share buybacks, then, that's like saying there isn't anything in the world worth buying. And that's like saying we will mine ourselves out of existence because every ounce we produce is one less we have.
Now, you talked about upgrading a mine. Do you mean like mill expansion, or what do you mean exactly?
any of the above? I guess you gave only one example, but yes. I mean, and okay, let's say, but there's a lot of possibilities. You may, if you've got a mine that's already paid off, maybe you've got lower grade material that's thought of as being an end of mine life kind of asset. You could pull that forward because you've already paid off the mine and you can afford to. Or let's say it's an oxide mine and there's a known sulfide resource at depth, but the capex would be large to go after that sulfide material. Maybe it's refractory and you need HPGR or an autoclave or something. But if it's there and if it pays and you've got money, do it. Right. It's in my view, that's much better. You're adding to your business. You're adding, as we were just saying, if you're not discovering and you're not buying, then every ounce you produce or pound or whatever it is one less that you have to the end of your company's life. You literally operate yourself out of existence in this space if you don't discover or buy. So I think that the funds are best used expanding, securing growth. Ultimately, it has to go into exploration. And either that's your own, funding your own team, or joint venturing with the juniors, using other people's money, letting them take the risk, letting them beat their brains out, right? And then taking them over. But if you just sit on your hands and do nothing, you're not going to be around for too long.
Yeah, I agree, especially if you're just doing share buybacks and dividend increases. I mean, because that's what you would do if you're running what a consumer staples, Warren Buffett type of business. But for mining companies, you have to deal with depletion and ore grades
Right.
falling,
Yeah. That's exactly right. I mean, if you're making shoes, people are never going to run out of feet, but people always get new shoes,
They
right?
have to reorder the shoes too, right? Because the shoes will break, so you get
Yeah, that's
repeat
right.
business.
Whereas mining, every ounce or pound you produce is one less you have if somebody isn't out there doing the hard work of exploring for more.
Yeah, so you can't run the business exactly the same way that Warren Buffett and Benjamin Graham would have advocated for, because you have all those other issues with higher costs and depletion and ore grades, and then the case of what Bear Gold, where just the government of Mali just decides that they want to renegotiate the royalty tax, or Panama, Cobre Panama, where the government decides that they want to put in all these environmental penalties and shut down the mine.
Yeah, exactly. And that's what makes this at best of times speculative. You mentioned, actually, if we don't mind rewinding the conversation a moment, you mentioned that you've got either new people in your audience or people in your audience that are newly paying more attention to gold and gold stocks. I think it's a useful thing to sort of just take a deep breath, think of what kind of investor am I? Look in the mirror, do some introspection. Howard Marks is really good at outlining the case for introspection here. But this is nothing new. Other investors have been saying this for decades. If you have a low tolerance for risk, you really don't want to be mucking about with the juniors. If you really can't afford to lose money, maybe you don't even want producers. Maybe you want just an ETF, a gold ETF. Like if you're bullish on gold, but you're worried about the volatility for even the biggest and the best in the business can have a mine nationalized, or the legendary endangered mosquito, or whatever, right? These things happen. So if you want to avoid that, but you see the upside here, then just go with a gold ETF. No leverage there, but also none of the risk of mining, only the market fluctuations. So, the simple thing to do is to start with the metals themselves, and then a little bit more risk you could take on the big royalty plays, because they take out a lot of the idiosyncratic risk from the miners, and then the miners, and then down the food chain to the mid tiers. The big miners, mid tiers, then the juniors, right? So there's a whole spectrum here of risk and reward. And sure, the biggest mega cap royalties and miners, they're unlikely to give you a 10 bagger or a 20 bagger, or one of Doug Casey's legendary 100 baggers, right? That's not going to happen with one of those big guys. But the risk you've got to take on swinging for the bleachers for those others is a lot more. And if you know who you are as an investor, what kind of tolerance you have for risk, how much you can afford to lose, then that tells you where to go in our space.
Yeah, some of those ones that people think that they could get 10x or 100x, those gold stocks or silver juniors, those things could lag. They might not go up. The assets that the company owns might not be as good as the marketing materials that are being mentioned on podcasts or something like that. Now, you talked about some of the larger gold miners making investments into juniors, like a private. Do you mean like a private placement, like what Agnico Eagle has been doing with some of the juniors around Canadian Malartic,
Oh,
where they
most of them do that. There's it's one of those things that the juniors will tout. Oh, XYZ major bought in. They're funding our not just a project, maybe a regional joint venture where they provided $20 million, and they have a right of first refusal on anything we discover. That this sort of thing happens a fair amount, and that I think is yes. The answer to your question is yes. I want to see more of that. I think the majors have to be doing this to secure their pipeline. It would be a black mark in my little book if they didn't do something like this, because for the very reasons we've been discussing, they have to do this. There has to be more in the pipeline, or they're in trouble. Now, what form does it take? Is it a private placement, or is it it depends. But on the flip side, participation of a major is no guarantee that a project or a company will deliver. And a lot of these deals are structured, so the junior will say, "Oh yes, XYZ major is funding us, $30 million or $40 million in exploration expenses and so on." Woohoo! It sounds like, wow, that they must really believe in them. But if you look at the deal, okay, it's 30 or $40 million with milestones like delivering the first resource estimate, delivering the first feasibility study, going into production, right? They don't get all that money up front. They didn't just give them $40 million and say, "Here, boys, go out and boys and girls, sorry, go out and find me something." It's not like that. There's earned road marks along the way. There's stages. And if things aren't going well, if there's a couple projects that the junior has that the bigger company likes, and they say, "Yeah, okay, we'll sign us up. We'll help you out," and things don't go well, then they'll say, "Oh, sorry, we're canceling it. We're canceling our option." And they've only spent 1 or 2 million, to get a finger in the pie, decided they didn't like it before they walked. So,
Oh yeah, that's a very good point.
the devil is in the detail there. You get, but it is good. I mean, it is clearly never bad for a junior when one of the bigger serious players, gives them a vote of confidence and a whack of money.
Well, what else pisses me off, there's a couple things about that, is what the junior then will take the press release saying like, this large mining company invested in us, and then they'll use that as marketing material to raise more capital, or the senior management team will then start dumping stock. So people have to watch out for that. If the senior management team, after the announcement that, oh, we got an investment from a large mining company, they start dumping, the insiders start dumping a lot of their shares, or they do capital raises, the reverse stock split, the selling general and administrative, as Rick Roll has talked about, they start funding that for marketing on podcasts or other stuff. They waste it at conferences and marketing. Those are red flags that people have to avoid. Those are not serious companies.
Yes. And a lot of this is available if you don't have to be a CPA. Just take the trouble to look at the balance sheet and the P&L and how are they spending the money. If the G&A ratio, there's the G&A ratio, whereas the G&A is more than what they're putting in the ground, in my view, a G&A ratio of 1 or more, or maybe even 0.75 or more is a red flag. There's there's more like that, but also there's information on the ASX or CanadianInsider.com for the TSX. There's information out there for insider buying and selling. And sure, if there's supposedly a vote of confidence in the story and suddenly the insiders are selling, that's a huge red flag.
Now, I want to ask you about country-specific risk. We've seen what the news with Panama, with Barrick Gold and Mali. Are there any countries, and I know you and your team visit a lot of these mine sites, are there any specific countries in Western Africa, Latin America, that you don't want to invest right now, that even though there's good geology, there's some potential for large discoveries of copper and gold mines, that you're saying it's just not worth it? The politicians, bureaucrats, maybe even the warlords, if it's Africa, that are running this country, they're going to confiscate the mine. They're going to put in an absolutely insanely large royalty tax on the mine. Are there any specific countries you think that people should stay away from?
Well, sure, but it's fairly obvious. I mean, I don't think I need to tell anybody that Venezuela is risky or Somalia is risky. I would say more broadly for Africa, any place that's had a coup d'état in the last couple of years is a no-go zone for me. And so that's Mali, that's Burkina, which is a pity given the resources. And people often push back on me. Our friend Rick Rule says it doesn't matter the color of the skin of the person who steals your money, right? All good. But in my mind, it is clearly higher risk in a place with multiple coup d'états in recent years than Ontario or Nevada. And okay, it's more expensive to invest in Ontario or Nevada, but some level of security is worth a higher price. That doesn't mean I want to overpay. At some point, price trumps risk, but it needs to be for high risk places like pennies on the dollar. And if there's a recent coup d'etat, if you hear about a coup d'etat, like that's absolutely uninvestable until you see how things settle. Like now, it's been a while in both Mali and Burkina. We have a sense of how things are going under the current juntas. But immediately after, that's completely uninvestable. There's other places that are just powder kegs, and you never know. South Africa, for example, it's been a powder keg for decades, really. And it's gotten better, it's gotten worse. It hasn't really blown up, but it could. It's the kind of place that could just go up in flames. And when you hear about it in the newspaper, when you get up in the morning, it'll be too late to sell if you're in there. Generally speaking, most of the Central American countries are not welcoming of mining. Much of South America was going the wrong way, but I don't know if reality has set in broader, but clearly Argentina has taken a strong turn in the right direction. And I am invested in Argentina and I'm looking to take on more there. Chile was teetering on the brink, but they seem to have been talked down off the ledge, and that's looking less scary. Peru, that was wonky. It's not that the government is anti-mining, but I think anti-mining sentiment in Peru has been so riled up that unless you've got like a small footprint underground mine that was relatively easy to permit, as long as the locals are on board, it's pretty high risk. The big one that people ask about is Mexico. And Mexico, I will say that Scheinbaum's bark seems to have been worse than her bite, at least so far. She does not seem as rabidly anti-business as was reasonable to fear, I think, given her background, not just what she was saying. There has been some permitting action there, which is encouraging, but we haven't seen, the big open pit mines that will really move that country forward permitted. And I want to see more there. So right now, I have removed all Mexico risk from my portfolio when it was clear she was going to win, and I have not put any back on, and I'm not ready to do so yet.
I don't think I've seen a large mining company commit to a huge mine in Mexico in the last year or two either. I mean, I've seen like some capital investments into mines, but no massive project like what Mag Silver did with Fresnillo. We haven't seen one of those lately.
Right. And I mean, honestly, it's not even just the permitting. We look at what happened with Fortuna and the ridiculousness over the San Jose mine permit, and when the 12-year extension suddenly turns into 2 years, or Almaden, not to pick on these guys, but the lawsuit that's holding up Caballo Blanco not Caballo Blanco. That's an old Almaden project. Ixtaca, the Ixtaca project, short for Ixtaca, but that's something Aztec with a lot more syllables. But anyway, yeah, I mean, the basis for these suits are so spurious. I mean, if that goes through, it basically invalidate all the mining licenses in the whole country. It's ridiculous that something like that can hold up the show. And in places like that, it's not just permitting, it's rule of law. And that, if you're going to invest hundreds of millions or billions of dollars, that's a big deal. So not to beat up on Mexico too much, but it is one that people ask a lot about, especially silver bulls, because it's hard to find a great silver project outside of Mexico or some of the other countries I've already mentioned,
Well,
right?
I would say Argentina's definitely heading in the right direction with Malay there. And I mean, didn't he put in a tax break policy if there's an investment by a mining company before the end of 2026 that they get some type of tax breaks and currency
Yes.
breaks?
Yes. It's called Rigi for short. It's real. It's there. It's making a difference. I have been on the ground and I have talked to people there that are making investment decisions accordingly. And even better news is that talking to people on the street, it's really, there's people that they love Malay, they love everything he's doing. He was, the savior that came in out of the blue. They didn't understand even, let alone agree with what he was saying. But once he got in and started, he stopped inflation. So I mean, not eliminated it, but he stopped the triple digit inflation, right? So there's a lot of people that are pro Malay. It's a lot, but there's still a lot who are not pro Malay, but they're not anti Malay. Okay, the hardcore union types and the people that go around with Che Guevara t-shirts, of course they're anti Malay. But you talk to taxi drivers and waitresses and people like that, and I did, because I speak Spanish. I did a lot of man on the street interviews, and it was very funny. It was just like you would ask somebody, and they just like get this tired look on their face. They take a deep breath, and they say something like, "I don't know, maybe he's a madman, but we needed a madman,"
Yeah,
or
I mean, I
right, something like that.
he
It's
has
not that they
interesting
like
hobbies.
him.
Definitely an interesting guy.
Yeah, the one guy summed it up. He says, "Look, I don't like him. There's something not right with that man in the head," he said. "But we were on our way to becoming the next Venezuela, and now we're not."
Well, I can imagine the people that would hate Malay the most are actually like the rent-seeking, the parasites, the government bureaucrat that were overpaid, that were stealing funds. I mean, like, wasn't Christina Kirchner, and she was president, what, eight years ago or something like that? I mean, she had a mansion that was filled to the brim with dollars and euros and gold and Bitcoin USB drives. I mean, like, she was straight up stealing billions of dollars from the Argentinian people with money printing. So, I mean, like,
Yeah, I
that's how
mean,
bad. Hmm? Huh?
it's oh, I can. There, Argentines have some very funny jokes about this, but we probably shouldn't take up the podcast with it. But we're talking like suitcases full of money kind of situations, like cash.
Well, not hopefully not Argentinian pesos because those things were being
Yeah,
debased rapidly.
no,
They're probably in other currencies.
dollars, but my former colleague Marion Katusas used to say, "Yeah, the dollar is toilet paper, but it's triple ply."
Yeah, it was way better than the Argentinian. It was managed way better than the Argentinian peso because what there was a black market. I'm sure you know this because you went to Argentina a lot to visit Doug, but there was a lot of people in the black market economy using dollars.
Always has been. I mean, it's still there. Let's see. Actually, Millet just freed up the exchange, so it'll be interesting to see what happens. The last time I was there, it was kind of like if you go to Vegas and there's all those people trying to put glossy photographs of strippers in your hand as you walk down the street. In Buenos Aires, it's the same thing, except for instead of strippers are trying to get your dollars, not to steal them, but they'll offer you a better rate than in the bank. And it's like every 5 meters, there's somebody there, offering you to buy your dollars.
Oh, like a black market. They want to take you to a black market currency exchange place.
Yeah, or they'll do it right there. They run when they see anyway. But that might have just changed. I haven't. This just came across my virtual desktop like today or yesterday, and I haven't had the chance to dig into exactly what was done. But I saw, if I'm not mistaken, I saw headlines about Milei freeing that up.
Well, yeah, I'm really bullish on Argentina. I mean, unless something drastically changes, I think the next couple of years for Argentina are going to be really good for mining investments. We just had one of the largest miners in Argentina. I think they're state-owned enterprise, and they just bought the old Gualcamayo mine. I think from what was it, Pan American Silver, and they bought it, and they're going to invest $1 billion and restart the mine over the next couple of years. They're going to add in the underground mining portion.
Well, I mean, I don't know how long you want to spend on this, but provinces in the Andes that were very anti-mining have changed their tune and are now trying to seek mining investment. One of them, Rio Negro, had permitted a gold mine just before I visited in February, and that was one of the ones like Chubut, not quite as bad as Mendoza, but it was on the blacklist. It was not a pro mining province. So you're seeing that like not just in rhetoric, but in fact on the ground. And Milei's got, what, 3 years left? And it looks like, I was really worried the guy would get shot, but he hasn't been. And now he's made enough of a difference that I think the Praetorian Guard would like to see him live. And by the time his term is up, if there's enough time for him to make enough of a difference that he or his people could continue going. I also understand that if he does get shot, his number two is just as hardcore as he is, so that wouldn't necessarily change the agenda. So, and 3 years, that's enough time for a discovery to become a deposit, or a feasibility study level project to become a mine, if it's not one of these billion-ton projects. There is time enough, even in the likely worst case scenario, for profit to be made in Argentina right now.
As we wrap up the interview, I want to get your thoughts on how quickly the U.S. could accelerate maybe mine development in Arizona, Montana, Wyoming, some of these Midwestern states, because there is some good copper and gold projects there, and some of them have been blocked for many years with permitting. Do you think that we could see in the next couple of years before Trump leaves office with this term, that we could see those mines start construction?
Construction, some maybe. There's really one, and you and I both know which one it is. That's the poster child that seems likely, and if I'm not mistaken, is on the list of projects to be expedited. But even if that one gets permitted, it will be 3, 4, 5 years. I don't know when that will start materially producing copper, but it's a big project. It won't be soon, so it's not going to make any difference right away. I don't get me wrong. I'm not saying it's bad that the administration is removing the cork from the tailpipe of the mining industry. I think that's fantastic. I'm all in favor of it, but it's not going to produce new supply anytime soon. Realistically, even with the permitting, you still need to raise the money. Many of these, if they have a feasibility study on them, it's now years out of date. They're pre-COVID, and they really need to be redone. Many of them are not at that level. I don't think there's much that's shovel ready in the United States. So I think the best case scenario is that we start to see meaningful changes in domestic supply in 3 to 5 years as a best case scenario, and more likely 5 to 10 years. So it's good. It needs to happen, but it doesn't, like, people who are worried that suddenly there's going to be a bunch of supply from the United States. I'm not worried about that at all. Not
Well,
anytime soon.
I think the bigger worry now is that Trump has picked what the tariff wars and the trade wars before he passed the tax cuts. And now you have China, instead of like necessarily just raising tariffs in retaliation, they're talking about banning rare earth exports. You have issues with the U.S. importing enriched uranium. That was over the last couple of years with Russia. So the Russia stopped that. So the U.S. just doesn't have a reliable supply chain in-house for a lot of its needs for metals.
I think this is, well, not all metals are alike. I think this is one reason why, when it came to copper, instead of a tariff or a ban or anything like that, all we got was a study group, right? The executive order on copper was, oh, we're going to study this, and nothing has happened. I suspect that somebody got to Trump and said, sir, if you make it difficult for us to import copper, we're not going to have any. There is no alternative. This is a Tina situation.
Oh, but it's not as bad as rare earths though, because I mean, like, rare earths are not really that rare. It's just that like getting the environment is ruined by the air, water, and soil, and so China has like sidestepped all of the environmental
Well,
requirements
that's
for.
true. They're not rare, but the processing, it's not just the mining. The processing is mostly done in China as well. And it's not simple like floating gold or copper concentrate, something like that. Every rare earth mine has a different suite. I mean, remember, rare earth isn't one thing. It's 16 lanthanines or whatever the heck it is. And every one of these deposits is different mix of heavy rare earths, light rare earths, and the chemistry is different for each one. I have seen before where projects with full feasibility studies with very robust margins can't raise any money in rare earth specifically, can't go forward. It's still sitting in the ground because the devil is very much in the details. This is hard to do. There's a reason why there's so few companies in this space. So in a way, I'm agreeing with you that this is leverage that China has, but it's not one that simply throwing money at it or even reducing regulation can fix it. Not quickly. It will take time to fix this.
Yeah, I totally agree. And also, like most rare earth deposits don't even have dysprosium, which is what is needed for the rare earth permanent magnets, so they don't have the right percentage. And then you have to store a lot of those rare earth elements. They have radioactive properties, so because there's byproduct of either uranium or thorium that needs to be stored.
Right, which is to the advantage of some companies that have experience with that, but we don't need to go there.
Well, or if you're China and you don't care if the air, water, and soil around the mine is
Right,
destroyed, and like
right.
no one could live within 30 miles or something around there. I mean, like the U.S. has way different environmental regulations there.
Yes.
Like all the
Agreed.
uranium has to be stored somewhere, what Yucca Mountain or somewhere else, and the thorium has to be stored. We just put it in containers in. I think they were putting it in Nevada desert.
Uh, no. Well, Yucca Mountain was shot down. It's empty.
Oh, really? They emptied Yucca?
It was never started. They got all up in arms, and this is a huge political football. It's empty. It's sitting there. It's been waiting for, I guess, decades now. I'm not sure when it was finished, but it's never been used. It's sitting there empty. And our nuclear waste is stored at our nuclear plants. They've got big pools of waste waiting to be long-term stored.
No, I was under the impression that a lot of it's in Nevada and Arizona. I guess maybe there's misinformation out there on the internet.
Well, Justin Hune would know more of the details than I. And it may be that there are some temporary storage facilities there, but there is no permanent solution that I know of, except, I mean, not in the US. I mean, Finland, of course, they just started their big underground long-term storage facility. And it's interesting to me that it's it's um, it's storage, because a lot of this so-called spent fuel, it's only spent using current technology. A lot of this spent fuel is still fuel if you change your reactor design.
Yep. Yeah, liquid fluoride molten salt thermal reactor, the small modular. I think Areva, before they went bankrupt, they've restructured in France. They used to recycle a lot of it. So they'd take the old fuel rods and they'd be able to get some type of yield. It was not cheap, though.
Right. It's not that we can't uh, reuse and reuse and reuse the fuel. It's that the current processes are very expensive. It's not economic yet, but at some energy price, I guess it is. We'll see. Or maybe there's a tech breakthrough that makes it less expensive.
Well, I like the liquid fluoride molten salt thermal reactor, but it's really cool that finally they're starting to invest. We're seeing this not just in the US, but other countries in what these small modular nuclear reactors. So they are getting pilot plants approved for those in
But
different
remember,
countries.
SMRs is not necessarily the same thing as MSRs. And I agree with you. I love the molten salt reactor design. To my mind, that's just it's the no-brainer design. It's the one where if you know if somebody produces releases sleeping gas in the nuclear power plant and everybody's incapacitated, the thing shuts itself down without anybody throwing a switch. And I just you just can't get any better than that in my view.
Yep, yep,
And
walk
it
away safe.
recycles fuel, and if you do it with thorium, you have a much more abundant fuel source. But for our uranium fans out there, I actually, if fusion doesn't displace fission anytime soon, I do think that actually thorium eventually displaces uranium. It's just a cheaper, better fuel. But that doesn't happen quickly. And there's headlines, and people are asking me about this. I bring this up because China just brought a thorium powered reactor online, and not just some bench scale desktop model or even pilot plant. Like, this thing's connected to the grid, if I read the story correctly. But it's still a demonstration project. China also just announced the approval of 10 new reactors. None of them are thorium reactors, right? So we're still a long way from this technology being proven and going into mass commercial deployment. When that happens, yes, that will be highly material to my uranium investment outlook. And I expect to make changes to my marching order at that time. But I think we're years from that still.
Yeah, I'm a long-term nuclear power uranium bull too. Although in the short term, there might be a cutback in some data center capital expenditure. We'll have to see. It's kind of debatable because I think Microsoft cut some leases, but the other companies, Google and a few other companies, Meta, I think
Yeah,
bought the
but that was a
leases.
tailwind, Jason. No, the reason for buying uranium, at least for anybody that isn't a Johnny come lately, was never AI or even the electric cars and the EVs and all that. We needed more uranium without either of those tailwinds. If both of those completely go away, no AI, Elon goes broke, nobody ever buys another electric car ever, which isn't going to happen. But let's say that did happen. We still need the nuclear power plants. The population is still growing. We still need more electricity, and nuclear provides baseload power. I don't need to tell you this, but I'm just
Yeah.
minding the audience that, don't get distracted by the narrative that was unnecessary to begin with. And if it goes into reverse, it doesn't matter.
Well, I think it will matter. I think like the way things are headed with the technology companies, with these humanoid robots, which we were discussing before we started recording. I mean, those things are going to use it insane amount more power. They're talking about what the Elon Musk data center XAI for Grok artificial intelligence software that has 100,000 GPU units. They're scaling it up over the next couple of months to 200,000. They're about to raise what $25 billion. He wants to raise another 25 billion to take it to 1 million GPU units for one single data center over the I think the next 5 or 6 years. That's insanely large.
I'm not against that. I'm not saying it won't be. I'm just saying it's not necessary. Like the case for uranium and nuclear energy is solid even without that. And if that does happen, if you're right, I mean, who knows? People were so sure of this, to push back a little bit, and then DeepSeek comes along, right? It upsets the apple cart. Maybe before Elon finishes his next expansion, Jensen Huang announces some new NVIDIA chip that's 100x more energy efficient. I don't know what's going to happen, Jason. I'm not that kind of technology guy, so I don't want to speak beyond my expertise. And that's why my bull thesis isn't dependent on any of those. I'm not disagreeing with you. I'm not saying it won't happen. I'm saying I'm a bull anyway. And if it does, more better. And if not, I'm still confident I'm going to make money.
Very good. As we wrap up here, Lobo, can you please tell my listeners about your paid newsletters?
My paid newsletters. You're a gentleman, sir. Well, the Independent Speculator is our flagship service. It's based on my own portfolio. I don't just disclose that I may have a conflict of interest here. It is what I'm doing with my own money. And it's a very in-depth, thorough service with daily level service. There's something else called My Take, which to my knowledge, there's nothing else like it in the newsletter business. It's not really a newsletter. It's a database with almost 1,000 resource stocks in it. And I have a whole team that helps me keep track of this and update it frequently. And we take requests. So you can slice it and dice it and look for, say you want silver exploration in Mexico. You could search for just that or not that, right? So it's a very different kind of product. And if you're not sure about, crazy old wolves like me, then we do have a free letter called the Speculator's Digest. If you sign up for that, you can get a feel for how I think and how I work on my investment theses. It's free and you may or may not like it, but my one promise is that I won't spam you. You sign up for that, you get one email per week, no flood of daily advertisements.